Good morning, ladies and gents. Good morning, ladies and gents. All right, volume is working. Looks like we're good to go. How's everyone doing? Sorry, I got sidetracked looking at some tickers, getting some game plans ready, and next thing I know is 3 minutes in. Hey, anyways, good morning. Let's get started. Exciting day ahead of us. First gap up we've seen in a few days, maybe roughly almost a week. And this is a very key gap up that we're looking at here. So what is going on? Last time we looked at it, and we're going to stop talking about it. This is going to be the last time we talk about it. Last time we looked at the charts, it's the head and shoulders, huge follow through. And we've been talking about this inverse head and shoulders for some time now. It could come down to all the way to the GP. As long as that GP holds, this is going to be a very nice head and shoulders. Now, what we actually saw was a hold. What I was looking for was actually maybe a pullback to the 0.5, which is right at the bottom of that key zone, where we're seeing multiple resistances, the short-term key zone. And instead, we saw a pullback to the 0.382. There's been a couple wicks under, but nothing that even closed near it. So what this means is an extremely strong chart. Okay, extremely strong chart. And inverse head and shoulders is most likely now, with the break of neckline, which we are seeing in the after hours pre-market here. There's a slight bear divergence on the 5-minute right now, but we're looking at the long term from here, or at least personally I am. Okay, this is an explosive move that is I'm looking at that's coming up. And I'm gonna quickly share what early signs I saw yesterday that in our chat room, where we called out that there's likely the daily higher low is likely gonna be in. There's 4 early signs of explosive move to come, and I'm just gonna move it over here. Let me make sure that you guys can see this. Oh yeah, okay, so this part that we're looking at anyways. Everything I wanted to see as an early sign of explosive move is showing up versus behavior change, with dips being bought. So if we look at yesterday's chart, early sign, early in the morning, right at the open, there's a huge sell-off and a wick under that pennant that we were tracking. Okay, a wick under that was immediately bought up. This is very notable. When you get breakout fakeouts, you generally expect decent downside. This is breakdown fakeout, so you would expect the opposite, which is decent upside. And that's exactly what you saw. And then depending on how you draw this upper trend line of the pennant or the pennant, this could be a back test. So because of these wicks, what you could do is drawing from here instead. And then you will see that this is a back test. So just depending on how you draw it, I kept it over here. Probably gonna delete it from going forward because we don't need it anymore. But regardless, this is a very nice back test. Dip being bought a second time yesterday, right towards that market close. This is very notable. So first early sign. Second is market unison. Yesterday we saw a market unison move upwards, almost regardless of whichever ticker you're looking at. Now across my board, my personal board, which is 20 some tickers, is all green. And that was exactly what I wanted to see for that marking the higher low. So second sign. And then third is upper trend line bull break. And this is exactly what we saw. And then the fourth is strong bulls extending short-term time frame before pulling back. So this message was shared 20 hours ago, which is brings us to 10 o'clock Mountain Standard Time. 10 o'clock is right here. So we were seeing an extension on the 30. We're getting extended. We're nowhere near that 30-minute 8. This is exactly what I wanted to see. We wanted to see that extension before an actual pullback instead of a break with no follow-through. And then look what happened in the after hours. So since the market closed, which is this candle right here, we have seen nothing but already bull flags. Okay, since the market closed right here, there's been a bull flag confirmed, already bull flag again confirmed, and now we're seeing very nice follow through. So the problem with this now is there's potential for, let me move this back here. There's potential for market open profit taking. Always gap up. What does gap up mean? Gap up means profit taking, right? So when we look at now, there's quite a few tickers we're gonna cover in this morning. So let's we'll try to speed it up a little bit. Like when I look at across my board right now, ETFs, my favorite to track. Even if you're looking at individual tickers, a lot of charts are opening up at resistance. So when we look at AFRM opening up at resistance, Unity opening up at resistance. MU is right at resistance. So let's just pull them up as we look at them. Opening up right at resistance, bottom of key zone. Airbnb opening up at resistance as well. Let's take a look at the daily charts here. Yeah, opening up at a resistance here. We did break that upper trend line. A lot of ETFs as well, which I like to use as a quick sense of what the market is doing as an overall. So when we look at ETFs, why, and this is China ETF, we're opening up at resistance. SOXL, probably better to use SOXX. So let's take a look at that one. Right at resistance as well. So that's a problem, a little bit of a problem on the shorter term. So what we'll be looking at is likely a profit taking off the start, off the beginning, at the market open. And what we'll be looking for is what type of pullback we're going to be looking at. Okay. Regardless, when we look at this chart, now I hope everyone in our channel is going to watch this video, because if not, you're going to be missing out. This is a very key break, especially, even if you're not an active trader, this is the one that you wanted to be watching for. I've been trying to share this message with the channel, with friends and family. You want to be looking at this move. This is a very key break. Inverse head and shoulders, neckline, broke bull in the after. The problem is after hours. They broke this after hours. So a little bit of a sell-off, probably a back test of this. So what we can be looking at, this is a decent move so far. If we draw the fibs over here, what we could be looking at is coming back down to the 0.382. Of course, we don't want to see that. We want to see a hold of right here. Let's see if that lines up with the 0.236. And it does. So it's just a matter of how strong the pullback is going to be. What we could be looking at is pulling back to somewhere over here. I think that's a little bit too extended. Likely scenario, pull back to the 0.382, and that would be, we're gonna need to see a pullback relatively soon if we're gonna pull back to the 0.382. There's a previous resistance all around here, so that would make sense. All right, so that's all we're gonna talk about in the market. It's a very important day. We need to see that dip being bought early on. Strong sign of bulls. Let's get into the tickers. There is a ton of tickers I wanted to cover. First one we're going to take a look at is Google. And remember how we said Google is going to be on top watch going forward? It was one of the weekly picks as well. And this is the projection that we had, since the gap up, the earnings, huge gap up on the earnings. This is a 10% gap up on the mega cap. That is huge. Right, so what we saw is profit taking. Next day followed by another profit taking. This was a very clear sign. The problem with this one is we gapped up just over new all-time high, and then from there we saw profit taking. So there could be strong bears that's going to come in. Okay, because essentially this is the breakout fake out. There could be strong bears that's coming in, but regardless, on the shorter term, we're looking at a bounce. This is the 0.5, this is the gap fill, this is the top of the key zone. This is the area that we're looking for a bounce, and look at where we bounced from. So it got down to 27.40. The gap fill was at 27.55, just a little bit more, which is actually quite ideal. I like it. Look at this chart. Look at this candle. This is a dragonfly candle. Somewhat of a reversal. I don't really like it as personally not one of my favorite reversal candles. Ideally, I wanted to see a hammer, but regardless, this is a very nice chart. It's going exactly what we anticipate. Of course, the time frame wise is a little bit shorter. So what we can be looking at is a bounce to at the very minimal. Let's see, upwards. So if we're to say downwards, does it line up with anything? 0.5. Okay, yeah. So we could be looking at a bounce to the 0.5. Now, this is what I'll be looking at for Google. Really like the chart. 20-to-1 split. Don't forget about it. Let me go through the list. This is a huge list to go through this morning. Amazon. How can we? Yeah. We have to cover Amazon, right? Of course, Tesla is going to be coming up. Wait for it. All right, Amazon. So what we're looking at is a upper trend line break. The huge gap up on earnings. This is, I think it's a 20-some% gap up. No, it's only 12%. Okay, 12% gap up on Amazon. And now we're seeing follow through. Very, very, very minimal consolidation on a 12% gap up of a mega cap. That is very notable. Okay, huge gap up. Very mild consolidation. The dip being bought, that was very notable. Dip being bought, and then now we're seeing a little bit of upper wick, except yesterday we saw nice bull coming in. There's a little bit of lacking volume, but a couple ways to look at this. It could be sellers are running out, or the other possible scenario is they're just gonna start slowly ramping this up, or a steady run. Okay, regardless, the chart, what the chart is telling me is this upper trend line has broken, bullish. We did close over it, and we are opening up at short-term resistance. So we will expect short-term a little bit of a sell-off, a little bit of a lower wick kind of a thing. That's Amazon. Next one, let's take a look at Tesla. Hey, everyone's baby, right? So Rondo, I'm not too sure if you're in right now. Looks like you probably aren't. Okay, well, we'll delay covering Tesla a little bit. Hopefully you'll make it in before the video ends today. Let's take a look at Apple. All right, Apple, we were expecting a pullback to the 0.382. I was. Okay, I was looking at it, this would make the most sense where previous supports, multiple bounces has been from. Point lining up with 0.382, this would make the most sense. 0.382 would make the chart still extremely strong, but instead, Apple wanted to be even stronger. Extremely, extremely strong. We'll call it very strong. Okay, extremely strong. And this is what we're looking at, daily bull flag. I don't like to call this as daily bull flag because essentially it's just a reversal. There is a inverse head and shoulders shaping up here as well. A strong inverse head and shoulders. We're gonna have to redraw this one. Yeah. Oh. Strong inverse head and shoulders with the neckline being right here. So it is still an inverse head and shoulders because the neckline is still bending downwards or going towards downwards. On the break of this, we'll definitely be looking at new all-time high. I think regardless of what's going to happen, Apple is going to be looking at new all-time high relatively soon, especially considering where we're bouncing from. Just going to need to see what the short-term profit taking looks like today and see that dip being bought. But the chart is ready to go on Apple. Yeah. Netflix. Okay, so a little bit of a red flag on Netflix here. Not a whole lot of gap up. What I was looking at is a potential very nice play on Netflix. We didn't take any positions on Netflix, but this is a huge red flag for me now. Big red flag at least. So what we're looking at is a big gap down, a bounce, a very nice bounce. This bounce was 30% bounce, and we rejected from that trend line again, where we've seen multiple previous rejections and then some supports. Huge gap down coming down below it, and now we're seeing rejection again. So this is a very key trend line to note on the daily, and we held that point. We held that GP. Okay, we held that GP, but we're not seeing a gap up with the rest of the market today. That's a sign of weakness. What we wanted to see is this being set as a daily high or low. We wanted to see that break along with the market. So Netflix may actually come down as one of the top watches removed from there going forward. Next one is Facebook. We lost a GP. Very nice reversal candle though. Bottom doji, slight gap up, so still showing weakness. We're not even gapping up above yesterday's high of day. That is worth noting. So Facebook will likely require a little bit more time before the bounce commences. But when the bounce commences, it's going to be very nice. Very similar to Netflix, where it was what? Let's take a look here. 4 days of 28% bounce. It's gonna be very similar for Facebook here. So we're gonna continue to watch Facebook going forward just for that bounce play, even if it's just for that bounce play. Short term wise, there is an upper trend line forming here. 2 rejections, strong selling pressure still, and it is RD8 guide down so far. RD8 reject, RD8 didn't even touch, and then came back down again. Now we're right at the yesterday closed. Saw a little bit of wick on the RD8, and we're opening up above it. Facebook, a little bit weak still, not ready. Airbnb, on the other hand, is extremely strong. Good morning, Naman. Facebook. Hey, how'd you know I was gonna go over Facebook? Great timing. All right, so let's take a look at Airbnb. Extremely strong. There's one of the very notable charts out there. Yesterday had a bullish engulfing candlestick. Okay, bullish engulfing candlestick breaking this short-term upper trend line. This is very notable. Very nice gap up today, straight into key zone alongside the short-term resistance. So we will be watching the same thing as everything else. We'll be watching for that short-term profit taking, and then see where the dip gets bought. Now with this, what I really like about this chart is it bounced. Okay, well, duh, everything bounced. But looking at this, it bounced from that key zone. It held this bottom key zone that was a must hold. Not to mention, it actually held from the top of that key zone. Okay, that top of key zone, and we bounced from the 0.382. Now with bullish engulfing, the only thing that's lacking now is volume. And I'm thinking the reason why it's lacking volume is because earnings coming up on February 15th. So they will, the likely scenario that I'm looking at is a run up into earnings and then a true direction from there, probably setting a daily lower high or higher high, depending on how far we run. Regardless, yesterday's candle is extremely strong. I really like the chart. Today, if you're in bull positions, what you want to see is an increasing bull volume on that candle. See that follow through. Okay, so that's Airbnb. Next one is AAL, American Airlines. Hey, reopenings are popping. Actually, everything's popping, but reopenings are seeing some notable strength. AAL, BA, Airbnb, Air Canada actually had a key break. We'll cover that. American Airline, very nice daily bull divergence. We're seeing follow through so far. We're going to need to break that 1976. Ideally, just break 20. Just break 20. Just break the whole key zone, while we're at it. So regardless, we're looking at a very nice move from here. Daily bullish divergence, follow through. Slight gap up today. We don't want to leave a gap, so we will see for sure a gap fill. I'm thinking that there's a potential. So when we look at Air Canada, there's a potential for a key reversal from here for the reopenings. So when we look at Air Canada, for example, long-term uptrend line, upper trend line, 1, 2, basically a rejection. Let's breakout, fake out, and good example of what to expect when it's breakout, fake out, new lows. Okay, and now we're looking at breakdown, slightly breakdown, fake out, Inverse, no inverse head and shoulders. Yeah, slightly breakdown fake out, and we should see decent follow through to the upside. We are right at the money line, the bottom of money line now, where we've seen multiple bounces, 3 bounces from before. So there could be a rejection here. The chart is strong. Volume is nice on Air Canada yesterday. Earnings coming up on February 18th. So the whole sector is looking like it's moving together. But Air Canada, I really like comparing to some of the other reopening stocks, aside from Airbnb. Now let's take a look at BA. BA, not a whole lot of move. There is still, so there's 2 double. Oh, they negated this. Okay, so this is not a bull divergence then. That's a little bit of a concern actually. If that's not a bull divergence, this is a decent move so far. I wouldn't anticipate a break of this key trend line. We'll actually delete this wedge, because what is looking a lot more likely scenario now is actually a channel going forward. So we're to draw this and get it on point here. Channel going forward. Actually, I'm gonna keep the trend lines, because the trend lines I can actually I wonder if I can send an alert on this. Sorry guys, bear with me. This is the channel. Never set an alert on channel before. Entering channel. I don't want to. No, I want to exiting channel. Yeah, okay, let's do that. Hey, it might work. Okay, so if that's the case, then either way it breaks, it should notify me. So let's yes, we will keep this one going forward. And I think it's somewhere over here. Yeah, that looks right. All right, so this is a channel on BA. Until either way breaks, there's likely no play on BA. Next one is F, Ford. Liking that reversal yesterday. So this Ford, we shorted this. Well, there's 2 short plays. We shorted this from somewhere over here. And we called out, if you see a new high, that is going to be a very nice short position, a start of a short position. And then the break of this short-term support resistance, this will be an add. So we shorted this, and then when I shorted again personally, I shorted this somewhere in one of these 2 candlesticks. It took a few days to work out. It actually took earnings to work out. So from there, what I was looking at is this back test of this trend line, as well as GP, as well as monthly 8. Okay, we touch on monthly 8 now, and there's just so many reasons to play bullish on Ford. A slight gap up. I don't really like the gap up action. It's very, very minimal. We'll get gapping up to day before's high only. So I might actually take profit, because this is a short-term trade. Yeah, I might actually take profit here. But I like the reversal looking. Increasing bull volume. Dragonfly candle. Wanted to see a hammer. Daily was a little bit extended. So need to see that bull right away on Ford. I do like it as a reversal. 1, 2. So this is ABC. After 1, 2, 3, 4, 5, ABC. It could also just be an A. Looking at, if you zoom out, you can call this as just one leg down. So this is the A. There's gonna be a bounce of B before another C correction. Regardless, Ford is looking nice for a reversal. Even if you're doing a common share play, there's no reason to sell yet. Not at least until that daily 8. See what the reaction looks like from there. Next one is gonna be Bragg. Ooh, there's a lot of tickers. Hey, what tickers are you guys watching? Bragg, I really like. Okay, so we're gonna speed this up. Bragg, I really like the bull break on here. Yesterday, closing near that high of day as well. Huge, the biggest volume, the biggest single day volume ever. Whoa, that volume really came in towards the end of the day. Hey, well, look at this volume. Look at this volume. Wow, it's double of any other day you've seen before. So very notable trend change. Very notable volume on a key upper trend line break. Let's see if there's follow through today. Bragg 28% move yesterday. Right, next one is UPS. Now I took a look at this pre-market just a little bit before coming onto the video here. Between there's two tickers requested, UPS, FDX, so it's UPS and FedEx. Between the two, I really like UPS a lot better. There's a huge gap up on earnings. Slight consolidation so far. We are holding that money line where we've been chopping around a little bit, seeing multiple bounces. Okay, another bounce over here, and then became rejections, and then became support again, and then became rejections again. So it's now that we're gapping up over it, you want to see that hold. If we don't see that hold, we'll probably be looking back down at the gap fill. There's a lot of gaps on this chart. Gap. So this, if you look at this, even this gap eventually got filled. Yeah, if we don't hold the money line, that's a red flag. That could be actually a very nice short or even a put opportunity from there. We're seeing a gap up. Nothing significant. Just be aware of this gap that's left behind. The other one is FDX. Looking at, very notable in comparison. This chart is a lot weaker. We're not nowhere near all-time high. So a gap filled. I think we played it back here. I can't remember. I want to say that we played the gap fill, at least part of it. Anyway, so looking at this, range bound, key zone, and now we're chopping down and chopping in between. Really can't talk to you this morning. All right, so yeah, no clear trend. There is a bottom trend line. This is gonna have to hold. Wow, look at that bounce. Perfect. So this is the key trend line to hold going forward. We don't need this upper trend line anymore. You can probably redraw it actually. Let's see how this works out. If we were to redraw it to the high, to this one, still back tested. Yeah, we don't need it anymore. But there's this key bottom trend line to hold going forward on FedEx. Still seeing weakness in comparison to UPS. Now the other one is PayPal. Oh, look at that weakness. Backtesting previous all-time high. This is strong weakness. Would not be touching this chart. Upper trend line way above. The one that needs to break, at least. And this is the shorter term, or the increased momentum selling off, we'll call it. And then another gap down. Yeah. PayPal looking very scary, and I don't like it. Just continue selling off. This is a different type of chart where you see continuation, increased momentum to the downside, straight loss of GP, no bounce whatsoever. It went down to, is that platinum zone? Maybe it is. No reason for this gap. No reason for this bounce. And then another rejection, a huge gap down on earnings again, and continue selling off. Yeah, would not be touching this chart until at least a break of this increased momentum upper trend line. Next is, we got Facebook, XLE. Energy. Hey, no reason to sell. No reason to sell. So we saw a slight consolidation from this resistance. Back down, bounce from the 0.382. This is very notable, very strong chart still. There's no reason to sell. We did a little bit of a resistance from that next one, but we gapped up over it, and now we're seeing it as support. Until the chart reverses on this one, I don't particularly see any reason to sell. If you're playing this long term, your stop should be right here, that 59.84. If you're playing it a little bit shorter term, this lower trend line should be your guide. As of right now, we are seeing daily 8 hold, daily 8 potential for another hold. Next one, XLF, financials. So if we were to make a new all-time high here, there is a slight concern of potential bear divergence. Not really, but there is a potential for a bear divergence. Let's see. Choppy chart. Not really respecting much here. Short-term support resistance. We saw a bounce from there. Channel might have to be redrawn from here going forward, losing momentum on XLF. Potential for a head and shoulders. No, it's actually already broken bear. No clear patterns. W, no follow through. V shape. It's going to be chopped. I think finances is going to be chopped going forward. The balance is looking strong so far, but we're going to need to see new all-time high on XLF. So far, looking like a chop is starting to form. Next one, SE. Not AW. SE. Slight bearish action coming into NAS. Okay, SE. We saw a bull break on this upper trend line. So we didn't hold the platinum. No reason for this bounce either. Don't really like the chart. Not respecting fibs. Very minor support resistance. Why did we bounce from there? Yeah, it's not a nice chart to be trading off of technicals. So there's some bounce from the key zone, some bounce from support resistance, another bounce from key zone. No reason for this bounce. Didn't even touch the GP either. So technically, so the problem with this chart now when I look at it is this is not an actual break. So even though we did break that upper trend line, there was no volume on this break. There's no follow through on that same day. There's no actual nice break. Okay, this is a sideways break on SE, C limited. When it's a sideways break, the follow through, the momentum upwards will likely be a lot less. So with this chart, unless it breaks, let's see how can we do this. Right there. I think, okay, so the short term wise, the key to break is going to be right around here, where there's multiple supports and then became rejection and then back test. So right about here, 180.150, that is going to be the key, short term key to break. Potential for a daily trend reversal, but you're going to need to see that volume coming in, that bull volume increasing, pulling away. As for now, this is just a sideways break of a lower, a downtrending stock. So we could see form a new upper trend line, you know, something like this, new upper trend line, and then just continue to grind down. So that's SE. Next one is AEO. So I never looked at this chart before, but I drew it this morning. Looking at it, it's actually very similar to SE. You look at this upper trend line, a sideways break, and then continue to drop. Okay, it formed a new upper trend line here and continue to drop. Now we're looking at another sideways break. No volume. Yeah, we're looking at another sideways break. No volume. Wouldn't really be touching this chart all the way up, down to about 1850-ish. That key zone right in between that GP. You see how it's not respecting the fibs either? It's not respecting the 0.5, chopping around it. Yeah, I don't think the selling, so based on the chart, you know, it looks like the selling may not be done. At least the most ideal entry will be around the GP. That's AEO. Next one is Disney. Last but not least. Whew. Good morning, Darren. Oh man, you guys sure gave me homework this morning. There's so many tickers to go through. And we haven't covered Tesla yet, so... Alright, let's take a look at Disney. Disney GPK. Oh yeah, hey, I wanted to mention what a great, what do I call it? It's not really a call. What a great ask, Philip. You asked about Disney, whether it was a good long entry position right here, December 20th. Look at what happened from there. There was a 10% bounce, 10.5%. Amazing. You asked it right here. Okay, and then from there, so this was a very nice move, and it was a daily 8 guide. The loss, so this daily 8 guide, the loss of that daily 8 right here, that is a warning sign. Next day, gap down, increasing bear volume. That is the GTFO sign. And then from there, we saw another gap down. And now we are seeing a daily bull divergence. So from here, it would be a nice opportunity. The GP is still under. And when we look at this, I don't really like the chart as a entry from here. Earnings is coming up as well today. Okay. Oh, we don't want to see that. But yeah, there is potential for another move back down here. 1-to-1 extension target lining up with that GP around 123. The main thing I don't like about Disney is when we look at this chart, comparing to a lot of other charts out there, Disney pre-pandemic all-time high. Actually, pre-pandemic wasn't even all-time high. It was a lower high. So that's a very notable weakness. Okay, pre-pandemic all-time high was back in November 153, and then when we look at this chart, it's not only backtested the previous pre-pandemic high, but it's also lost it significantly already. The chart is, if you're looking for a long-term hold, there's a lot, in my personal opinion, there's a lot more other tickers out there that are better long-term hold. Disney does not pay a dividend either. Market cap 259, in comparison, the price-wise is very similar. If you're looking to hold Disney, why not just hold Apple? Just a comparison, right? Disney, when you look at long-term, so let's say we look at monthly, right? It's got a nice move since the bottom of 2009, 15. All right, so what is this? Roughly about 1100% to the high. But we look at the same thing on Apple. 5,900%, right? I know you're a long-term investor. So if you're looking at Disney, why not hold something that's a little bit more steady, right? You look at this Apple monthly 8, it generally bounces from the monthly 8. You look at Disney, it just chops around the monthly 8 a lot of times. From a long-term investor's standpoint, I don't think Disney is a decent stock or even a good stock or even decent to hold in your portfolio. It's relative weakness, gap down. So this is the only time it had a very nice gap up was on that announcement of something about Disney Plus. I can't remember, but there's a gap down, another gap down, continue selling off. If you want an entry for any reason, I'd be looking down around here, 123, 1-to-1 extension target alongside that GP, right? So that's Disney. Looks like we lost some viewers talking about Disney. Hey, let's talk about Tesla now then. Tesla. Rondo. You wanted to know how Tesla looks. So looking at Tesla, the day before his move is not ideal, right? You wanted to see what we wanted to see here. This is 9:30. 9:30. What am I on? Okay, so this is Monday. Yeah, Monday 9:30. Monday at 9:30. This backtest of this upper trend line, you wanted to see a move away from it. Ideally, make a higher high above that 947. But instead, we saw sideways. And then going into yesterday's morning, we saw another backtest. But then from there, we saw a little bit more decent of a move. Didn't break this one. So same idea as if you were to watch this backtest, you wanted to break the last high. Now we're watching this backtest, you wanted to break this high. Unable to break that is still a little bit of a red flag. I do like it as a chart there, but because it's dragging it out, and essentially is a sideways break. If you look at this one, so this is a sideways break of upper trend line. There is a potential that we're going to form another upper trend line. Now keep in mind, when we look at monthly chart, this is a 1, 2, 3, 4, 5 already. So with this consolidation, if we were to look on the weekly, ABC, yeah, it's pretty clear ABC, but because this Elliott wave 1, 2, 3, 4, 5 is on the monthly, we could be looking at a bounce before another C correction. So Tesla on the longer term wise, there could be better opportunities, better entries. If you were looking to play this one, personally, I would go with commons just because it's a sideways action. It's gonna take it might take a little bit longer for this to work out, especially when you look at a lot of other charts out there today. It's notable that there is some weaknesses. It is gapping up into resistance. It's not gapping up any higher than that. Let's see, day before Yeah, ideally by this point in Tesla, you wanted to see a gap up into somewhere over here. So this is somewhat of a notable weakness. Wouldn't really be playing calls. Let's just put it that simply. All right. I think that's it for the tickers we have. Disney. Let's take a look at the market. Go back to the market here. Oh, one thing I wanted to cover on. And you know what? We will go into market open again today. Because we were looking at that early market profit taking, and then wanted to see where that bounce coming in from. So we'll go into the market together on live. Nas yesterday, decent bounce, no volume. Today we're gonna need to see that volume coming in, pulling away from that upper trend line. This is still an inverse head and shoulders as well. Neckline being broken, we're gonna need to see that follow through on across the board. Nas, SPX. I think Russ is a little bit different. No, it's not different. Inverse head and shoulders already confirming. Hey, very notable actually. Russ just made daily higher high. Trend change confirmed. Very notable. The other thing I mentioned in our chat room is Russ was the leader downwards, dating all the way back to November when it first started pulling back. So with Russ being bull, there is a potential for it being leader upwards, or using it as a leading indicator at least. So there's inverse head and shoulders on everything actually. Need to see that follow through today. NAS still a little bit weak. When we look at this chart though, QQQ over IWM. I wanted to cover this. QQQ over DIA, Dow Jones. We haven't looked at this in quite some time. The last time we looked at it was somewhere around here. So we're expecting a back test, another touch of that money line. We got that touch of money line. We saw a slight bounce. Now we need to see the actual reversal going forward. And once we see on this chart is the most notable chart to see where NAS is going forward. Even if you were to draw the trend line over here, on the break of this upper trend line, you should see increased momentum of NAS. Remember, this is beginning. What we're looking at is a potential of beginning of a leg 3 move on the market. So when we look at the market, all right, let's ABC, 1, 2. It could just be ABC, but it could be 1, 2, 3, 4, 5. So if this leg 3, we need to see new all-time high on market. Hope you guys are ready. Next 10 minutes might be a little bit more quiet, unless you guys got some tickers you wanted to take a look at. Bitcoin, been a while since we looked at Bitcoin. Bitcoin, bull break. Rejected from that intersection of the upper trend line and the money line. And slight pullback, huge bull break. Nice follow through so far, increasing bull volume. Minor bear volume. The thing I don't like about this bull break is doesn't look too strong. No, it's not the V-shaped recovery that's most ideal. Instead, we saw both a bear flag similar to the market and then bull break. So with this, I would anticipate some sort of, well, we already saw one rejection around this area. I would anticipate some sort of stall around this area before an actual bull break. And on that next bull break, you're gonna need to see increased momentum. Let's take a look at other leading indicators. US dollars. Nice. This is exactly what I want to see for the bull market. US dollars, nice daily bear divergence, rejecting from that key trend line. We're seeing, oh man, dating all the way back to April of 2011. This is a weekly, monthly trend line. Multiple bounces again. A slight loss of it, but immediately bought up. Another bounce over here, and then this was very key to note. lost it, immediate back test, another rejection, and now we're seeing another rejection over here. This is a very key rejection because it does line up with the daily bear divergence as well. Now we're seeing a slight daily, I don't like calling this a bear flag, but it sure as hell looks like it. Daily 8 guide down potential. So once we lose this 94,629, we could be looking at further downside. If that is lost, what we'll be looking at is GP or fibs. Hey, GP lines up with the support resistance. Let's do a 0.382 also lines up with the previous resistance. So that's what we'll be looking at for US dollars, which is great, an amazing sign for the bulls. Now, when you look at YouTube, I recently came across a new channel, Meet Kevin. My goodness. So the guy, smart as hell. Now, watch some of his video. Smart as hell, not gonna lie. He's calling for a huge bear market, but the technical charts are not telling me that. So, and this is why we play technicals only. Ideally no bias. Of course, you're always gonna have some bias here and there, but ideally unbiased technical analysis is where the money's at. And you can always try to call the top, call the bottom. Is it gonna work? I think it's gonna work a lot more often based on technical analysis versus trying to time it. Now, the one thing so let's talk about the next huge pullback. Okay, the next recession, the next, there we go. Okay, the next, what do you call it? Pandemic. The next, whatever it is you want to call it. Remember, for those of you that haven't seen this one, this is the key leading indicator that I don't discuss too often because it is a much further out leading indicator. This is what we're looking at. Every time the US 10-year over 2-year, which is widely watched, there's only been one time in history that it did not predict correctly, and that was before Fed started announcing the data. And this is all the way dating back to 1970. Since they started releasing the data, it has not been incorrect one single time. Every time that US 10-year over 2-year inverses, which is, because this is a US 10-year divided by US 2-year, every time it goes sub 1, means the 2-year yield is going to pay more than the 10-year yield when it goes to sub 1. That generally leads to a market correction. So with that, we're gonna start watching this every now and then. It's not any concern yet. We are not sub 1 yet, but we are getting closer. We're getting close. So there is likely a chance of recession, correction, huge market pullback, whatever you want to call it, that's coming up. But looking at this chart, I'm not gonna say, oh, it's gonna be 2 years out, kind of a thing. Who cares? Who cares when it's gonna be? Look at the chart. The chart is telling me that it's coming. The chart is telling me that not yet. Now, even when it goes sub 1, it's gonna be within the I think the saying is within 18 months. Within 18 months of it going sub 1, the market correction will be coming. And when we look at the last one, I think it was within the year. Was it 18 months? So it was August 2019, February. Within the year, yeah. Within the year. It could be very much shorter, because I think the one that I saw before this one was what, August, February, so half a year. The one I saw before this one, which was 2008, somewhere back here. Yeah, 2007. This was about a year. So the time frame could be getting shorter from that sub 1, meaning that market correction could happen right away on the next one, or even within 2 months, kind of thing, once this goes to sub 1. Regardless though, if it does, that is still a leading indicator, whether it's going to be 2 months out, 6 months out, 1 year out, 18 months out, doesn't matter. Until that happens, I think we're going to remain bullish, and the chart is still saying new all-time high. I don't care what people say out there. Looking at this chart, hey, inverse head and shoulders, we're breaking that neckline. Let's see that follow through. Let's go. We're Gucci. We got our entries yesterday. We got our entries. We played this scalp from down here, And the move on the names that we played, SOXL, FNGU, they were 45% and 50%. We didn't catch the whole move. No one's ever going to catch the whole move. You're not going to nail the bottom. You're not going to nail the top. We caught a very decent amount of that move. SOXL, let's just take a quick look at that. Now this bounce, 4-day bounce, was 49.57%. Okay, this next move, I'm looking at it to be bigger. I'm looking at least the GP. There's going to be another 46% move. If we're looking at new all-time high, which I'm thinking could happen, new all-time high in the market. It may not happen for SOXL, the semis. If it does, we're looking at 80-some%. Regardless, we'll be looking for a reaction around here first. That's another 46% move. So with that being said, keep an eye on US 10-year over 2-year. It's not showing me any immediate concern yet. So that's another leading indicator. VIX, we played this nicely. Played part of this nicely. Now we're seeing consolidation. Daily bear divergence. Yeah, daily bear divergence from the high to the high, and RSI is going lower. So I would anticipate going forward. This actually lines up with nice market new all-time high theory. Bull thesis, whatever you want to call it. And from here, we should be seeing continued consolidation on VIX. There's going to be pop every now and then. It's not going to be a smooth ride to market new all-time high. But hey, I like what I'm seeing. Gold, little bit of a concern, but nothing major. Nothing major at least until this upper trend line breaks. So this is just a bounce. It's a decreasing bull volume bounce. I want to see a lower high. I don't want to see a break of this 1853. I don't think we'll get that, but never know. Hey, Bitcoin, Ethereum, nice bull break. Oil and crude. 5 minutes till market open. Good morning, everyone. Looks like we got increased viewer now. Oil and crude, very nice daily gut. Hey, oil, look at this. 88 bounce. Daily bull flag, 88 touch again, bounce, and then another bounce. We're at the 88 again. Is this an entry, or are we gonna lose it today? Based on the chopstick bottoms, not really bottoms, but the chopstick lower wicks, we should be seeing a dip buying. I think that's it for everything I wanted to cover in the market today. Let's take a look at NAS. We'll start zooming into the shorter time frames for the market open. So looking at NAS hourly, 1 o'clock Mountain Standard Time is when the algo always shows up. Sometimes at 12, but it seems like it's 1 o'clock all the time. Most of the time. Okay, yeah, so this was a little bit of a concern on yesterday's close. I was looking at this. SPX broke already. It had a very clear break. And then 1 o'clock, it had a nice dip buying. On NAS, however, it was notably weaker. Shorter term upper trend line, multiple rejections. And then even at 1 o'clock, we did not close over it. But instead, we closed over in the after hours. So this is okay. If the theory is correct, we should see stronger NAS going forward for this bounce, because QQQ over Dow Jones is at that trend line. Let's see what QQQ over IWM looks like. It looks like we're starting to chop around that trend line now. Might be a new trend line here. No. Yeah, it's a little bit more chop. Russ is strong, so that might not play into fact. What about QQQ over SPY? A chart that we don't look at. 3 minutes till market open. SPY. Okay, so slightly lost it. Oh, come on. Could be a breakdown fake out. If this gets bought up, QQQ should be strong going forward. No, regardless, you're looking at the charts. Amazon, Apple, Amazon, huge gap up, no selling off, and no consolidation, and now we're gapping up into Monday's resistance. Apple is a daily bull flag, holding that 0.382. Inverse head and shoulders, really like the chart. So and Google is reversing now. I do believe that NAS should be stronger going forward. It is lagging right now, so there is an opportunity there. If you're looking at playing NAS, a few ways you could consider without worrying about individual tickers would be, TQQQ, FNGU. I think that's about it. The two main ones I watch personally, at least. And 2 minutes. Oh, one other thing I wanted to cover is good opportunity for our Canadian fellows. Canadian FANG equivalent have been pulling back very nicely. So if you got Canadian cash sitting around, this could be an opportunity for entering long. Just remember, never enter full position at once. Either, maximum would do like half sizing, maybe even the third sizing, because we are still in pulling back phase. We are still consolidating. We need that upper trend line break first. But the Canadian FANG equivalent is STARS, which is Shop, TTD, Trade Desk, Adobe, Roku, and Square. You look at any of those charts, it's all pulling back very nicely. Some are coming close to touching that pre-pandemic high. Roku's already touched that pre-pandemic high already. So there's good opportunity for long-term. Personal preference is I want to see that reversal first. Ooh, SPX just made new highs in the pre-market here. NAS still lagging a little bit. So SPX new high. Ooh, short-term 15-minute guide, 15-minute 8. So the anticipation is on market open in 12 seconds here. We should lose that 15.8. Tesla seeing some weakness. Apple seeing some weakness here. Peloton. We didn't talk about Peloton. Very nice move yesterday. Ooh, double trigger. Ooh, that's a lot of alarms going on. A lot of alerts going off here. TSM, SFIX. You guys can't see it because I just pulled up Peloton. But TSM, SFIX, RBLX, FTNT, U, PLTR. That's 6 alerts that just went off due to the gap up. So Peloton, we saw a very nice move yesterday. Very nice move yesterday. Now we're going to need to see what actually happening. Yesterday is earnings. Yesterday also announced the CEO's resigning or something. I would anticipate this is going to actually come down. It can be actually, I might need to, let me see. Ford is gapped up nicer than expected, but sometimes I hate trading options. Oh, TTD alert just went off as well. Let me let me try to get that alert screenshot over. Bears coming in as expected so already selling. Profit taking on the gap up. There we go. Hey, is it actually moving bullish? Is Ford actually moving bullish? A little bit. Yeah, 1 week on it. I don't know if I want to hold. 40%. No, I'm going to take profit. Market is pulling back a little bit more than what we wanted to see. Hey, Russ is still bull. Remember, Russ led the market in bullish action yesterday, so that could be what we're looking at as well. Took profits on Ford February 18 call. 40% move, so that's okay. I'm still trying to get the alert over to you guys. Oh, no, come on. Oh. All right, there we go. Sorry, bear with me, guys. It worked. Okay. These are all the alerts that went off. Now add skills to it as well. Hey, look at that dip buying. Remember what we said? Russ led the bulls yesterday. This is exactly what we'll be looking for today. AFRM is actually breaking into daily higher highs. Breg is breaking into daily higher high. Ooh, actually, no break, not yet. Breg is 1 cent away. 702 yesterday, 701 right now. AFRM, nice gap and run. Of course, it's one of the growth names, so with Russ running, it makes sense. Hey, I really like the AFRM chart. You know, looking at this chart here. So we'll look at the daily on AFRM. Rejection from upper trend line. Hold that GP, hold that 0.5, whatever you want to call it, you know. And from here, we are seeing a nice reversal. This is technically a little bit of a sideways break, and that's what we saw, a little bit upper wick. But regardless, we are seeing that follow through earnings coming up. This move is now very much justifying that it's gonna see a daily higher high, meaning that, you know, unless earnings stuffs it, it should only fuel this move. I mean, comments. Nothing crazy on it. So let's look at the NAS folding over. Fed speak today. I have no idea. I think they speak tomorrow, from what I remember, Thursday. Hey Darren, I think you know. I think the Fed speak on Thursday, right? NAS seeing 5 minute. Oh, look at this 5 minute. That is chop. Or is it chopstick? It's so far as chopstick on the lower side. A lot of things are pulling back except Tesla. Tesla is green right now. Again, I have my chart set to based on the opening price. It's not based on previous close price. And you can have that, for those of you that are wondering, if you go to settings on the top right here, I can't remember where it is. Symbol? No. Appearance? Yeah, play around with it. It's somewhere here. Based on whether it's based on previous closing price or based on market open price. Oh, I can't find it. Tesla is green. Nvidia is red. Ooh, affirm. 68.84 we wanted to break. I thought we broke it. Oh, it's coming back down. Okay, so 68.84 was the key to break. We got up to 69.18. We do not want to see this kind of upper wick again, especially going into earnings tomorrow. Let's see that continuation. Russ is pulling back a little bit. So NAS is actually going now. Inverse actions. Choppy market start. Look at this. Hey, chopstick bottom. Like it. Oh, hey, I didn't even see this. Immediate backtest. Wait, no, we did see it. Okay, never mind. SPX has immediate backtest too. Hey, amazing. Again, I'm going to be AFK away from keyboard. I'm going to step away momentarily at 8 o'clock. So in like 20 minutes. Oh, there we go. Wow. There's all the alerts. Car went off too. So I'll take a look at the alerts. So we did see the immediate back test, and SPX looking like it's very nice run so far. Ford is still not moving. AFRM's good. Breg is coming back down now. Double top. Oh, that is not good. Breg is seeing double top on the daily with now a upper wick forming. Congrats to those that played it yesterday. 30% move on Breg. I was just chillaxing yesterday, so I didn't play this. But look at this. 30.24% move. Closing of 28% move upwards. Whew. You can expect a lot more of those kind as the market is reversing. Hey, NAS just made new high of day. Look at this. NAS. Huge lower wick. If you look at the 5-minute, this chopstick bottom was a sign. New high of day. It just broke pre-market high as well. Ford is still not moving. Yeah, I think I like my choice of selling, taking profit at least. Somewhat relative weakness so far. Same with Breg. Ying just made new high. Hey, for those of you that are interested in China stocks or looking at China stock, whether it's Baba or Baidu, this is a good indicator to at least track. It is a China ETF 3 times bullish, 3 times leverage bull. And this is the upper trend line that we're looking at. So we got the break yesterday, and now we're seeing follow through today with a gap up and run so far on Ying. FNG just turned green as well. Nice. Not an official announcement for Feds. One of the Fed people giving an interview or something like that. Thanks, Darren. You're always so up to date with these things, eh? Hey, by the way, if you haven't done so already, make sure to give us a like, a like and a subscribe. I hate saying that, but hey, the last time I said it, it actually worked. On the weekly stock pick, I think that's the highest like we've seen. 20-some likes. One of the highest views too. So glad that you guys enjoyed the video. Let's take a look at market. 30-minute. A little bit of upper wick forming. So there was a profit taking, and this is actually what I wanted to see. Now it's let's talk about this before we shut down here. Because the reason why I want to shut down earlier now is I don't see any early on. I don't see any concern anymore. We were looking at profit taking for early on. I shared the message in our Slack group, on our chat group. For those of you that haven't joined, by the way, we are reopening our enrollment for free members this weekend. 20 members only, 20 individuals. So if that's something that interests you, make sure to check it out. The link will be shared in our YouTube videos. So we were looking for that profit taking early on in the morning. I wanted to see what the pullback looks like, what the dip buying looks like, and I really like what I saw here, even on that first 10 minutes. First 10 minutes of the market. Okay, nice lower wicks. There are some upper wicks forming, but regardless, I'm seeing this nice lower wicks go all the way, breaking the pre-market high. Now, anticipation is we will see a back test of this, but I like what I'm seeing in the early market here. And I don't think there's going to be red flag going forward. The only thing is we are a little bit extended on the 4-hour, not concerningly. So we did pull back. So what we could be looking at is an immediate back test of this, based on the 4-hour chart, immediate back test of this upper trend line. Wait, this is NAS, right? No, let's go to SPX. Sorry. We could be looking at an immediate back test of this upper trend line lining up with that point 236 that we talked about this morning. Oh, still making new highs, eh? So pullback. Actually, this is probably a little bit outdated now that we've seen new highs. Levels don't really line up as much anymore, so they could just continue to run this to over here where that 0.382 will line up with the upper trend line. Then from there, then they do a pullback to backtest. Yeah, no major red flags. No any red flags actually. No any red flags on this move so far. SOXX actually, I think we didn't discuss it yet. I think I might have missed. Yeah, I missed 2 tickers. SOXX. So you requested SOXL, but let's take a look at SOXX instead because that is the underlying, that is the baseline, that is the non-leveraged of SOXL. So what we're looking at here is this upper trend line that we wanted to see a break. This is a very nice higher low going to that 0.5. Nice lower wick. A break. We are seeing a little bit of red bears showing up. Early market here. But we'll watch for reaction on that gap fill alongside that upper trend line. What we want to see. Now the red flag is if we were to lose Monday's low. Yeah, if we're to lose Monday's low, that'd be a red flag. What we want to see from here is continuation. Okay, this is a 4. No, I didn't even realize there's a 4-hour chart. Daily chart has actually got a nice lower wick. So yeah, maybe we test tomorrow. We might not even test today. Depending on how this lower wick works out, it might be a retest tomorrow. Or later down the road. It's doing it again. NAS is a little bit of weakness, bears, while Russ is going bullish. Man, choppy market to start the morning. But Russ would be the main that I'm watching. So NAS, red candle. Russ, green candle. While NAS had a green candle here, huge green candle. Russ had a pullback. So watch Russ. As long as Russ is bullish, I don't think there's going to be concerns. So far, at least is serving as a leading indicator, leading index. Oh, BA is getting very nice move. What just popped? Russ. Was that Russ? Oh, 30. Okay, yeah. BA is having a very nice move. Nice follow through. Okay, let's go over the alerts before we shut down. We got 15 minutes anyways. Airbnb. Was it one of them? No, it wasn't. TSM. TSM is the first one. TSM. Gap up. Trigger the alert of the... I think I had it set at the trend line. I think I had it set at the trend line. Multiple rejections. Gap up. Coming down. Chopping around that trend line now. Don't really like it. What I do like is this double bottom. 113.91. 114.19. So with that, I do believe higher prices are to come for TSM. But we are seeing decent profit taking on this gap up today. A little bit more than ideal. No volume so far. No, correct that. Bigger volume than yesterday so far. Yeah, let's see if we hold this. It's shaping up to be a 5-minute reversal candlestick so far. Let's see if... Yeah, they're bouncing it. Okay. Next one is SFIX. RBLX, I think we covered already. Okay, so gap up above upper trend line and coming back down. RBLX. RBLX looking strong. Candle's not red yet. Oh, Oh, there's good opportunity on RBX. It is just a sideways break so far, but looking at this is a breakdown, fake out, no follow through. We could see huge upside move on RBX. So even if you were to do just commons as a first entry, I like this. Move to 87 is what? 30%, 30% move. I like it. Nas bears still showing up. FT&T. Upper trend line break. Continuation. No, the candle is still green. Wait, how did I always miss this ticker. When it moves, it really moves. 22%, meh. Okay. Yeah, I like it. I always miss this ticker, but it's a very nice long-term. Look at the chart. This is a very nice long-term hold chart. Now, on this pullback, what do we get to? Come on. By the way, if you hold control, you can zoom in to where your cursor is. Oh, we held the point. Basically, yeah, we held the point 382. This is a strong chart. Fortinet, really like it. Missed that long-term entry, but hey, I still like it there. I think there might be a little bit more pullback. But it's a ticker for investors you should definitely have on one of your, maybe your portfolios. A few more left. Nice back tested. Hey, this is working out a lot earlier than anticipated. Okay, so back tested. Let's just go back to what the original drawing looks like, so people won't say I'm BSing you. You know, forecast was from here. The part where it broke. Forecast was to get to the lower part of the key zone, a pullback to back test the trend line, and then before next leg move up. So reject from that key zone, almost a back test, but it's looking strong, like the chart wants to go. Unity, good spot for entry. Held that top part of the key zone too. I really like this spot for a long entry as a common. Not my current focus, but for those who are interested, Unity, definitely one of the top for you to, if you wanted to build a portfolio. PLTR is still a little bit weak, still seeing that rejection from upper trend line. No break so far, so that's very notable. A lot of other things have broken the upper trend line already. PLTR is still rejecting today. TTD rejection, a little bit weak still too. All right, so that's it for today's video. Hope you guys enjoyed the content. Hey, remember to give us a like if you get a chance. Thank you. Also, remember, free membership enrollment. Our second enrollment is starting this weekend. So if that's something that interests you, make sure to check out our videos there. It's going to be linked down below. Or if your friends and family is interested, make sure to share them the link. Send them the link. Again, thank you for watching. I will see you guys in the next video.